funds. Your fund now up 29.9% as of the end of April. Is that right?
That's right.
That is
Wow.
right. You should be happy and proud about that.
Yeah, I mean,
you should say it a little louder. You know, you sort of, what is it? It's just like a humble brag. What are we talking about?
No, I don't humble brag either. I mean, you run money for long enough, and you know what's coming around the corner at some point.
Is this a dog year's return, or this is a real? This is honest. That's 29%.
I made it up for national television.
Right. Okay, so no, help us with this.
That's awesome. That's good.
It is. You have long talked about the stock story being one that you've always worried about the Fed, that the Fed was sort of the central component to this.
Right.
Where does China fit into this? Because you think the Fed piece, or at least the Fed worry, at least temporarily, is behind us.
Look, literally 5+ years, 94, 98, 2000, it's rare that it hasn't been a Fed-caused market break through raising rates too much. So that October 3rd speech of we're going, well above neutral, and now all of a sudden we're pricing in cuts almost just over 6 months later is insane. The Fed's off the table, though, and that was my biggest concern. So
now
but you wanted to see how the earnings came through for U.S. companies in the first quarter, and they weren't that bad, actually. The earnings came through fairly well. The damage was limited. And now it comes down to China. And, I don't see the impact. I don't see the impact as being enormous in terms of the U.S. economy.
Right.
The question is, how far does this escalate? And, it doesn't have an enormous impact, but rhetoric-wise, it has an impact. Even if you look at the tape today, you can see people who are purchasing put options or purchasing protection. It's all near-term, dailies or weeklies.
But I get the sense that you're not even, you think there's the trade issue, but it almost seems like you're also separately worried about the Chinese economy on its own.
Well, I think that in 2000, I think a lot of last year, even with the stimulus, there was a lot of regulatory changes that I saw last year that I've really never, I've been investing in China for a long period of time. The restrictions on video games, after school education, issues on drug pricing. There's a whole host of regulatory issues in the consumer lending market that I think had a much more significant impact on their economy than the whole trade issue. In fact, so from my perspective, the regulatory environment in China changed last year, and that I think had a bigger impact on the stocks than the trade war had on. Trade war, for the most part, as of now, is sentiment.
So where are you putting your money, given this thesis?
I think that the U.S. remains probably the best house out there. I think the technology is becoming ubiquitous. I think even if the economy slows down, we're not going to go back to Blockbuster. We're not going to go back to 8-track tape players. We're not going to go to our travel agency. So a lot of the secular trends in terms of how we use the internet, whether it's for the consumer, whether it's for purchasing items, or whether it's for moving towards cloud or cloud-based applications, those trends are intact and will continue. Obviously, a recession can slow that down. I don't foresee a recession anytime soon.
You like the FANGs? We're looking at them right now.
The only one I think has a lot of operating leverage. I think Amazon and Amazon and Netflix have a tremendous amount of operating leverage. For me, I'm looking for usually the next Facebook, and I liked it for a long time, but
What is the next Facebook?
It's not Uber.
No, it's Lyft.
But Joe recommends Lyft.
No, I'm asking you. If it's not Uber, what is it? It's not.
I think this next shift, as we look at, you look at a product like Amazon's Outpost, for example, where they'll come into your enterprise, they'll run everything for you, right? So that there'll be a seamlessness between the cloud and on-premise technology. I think that moves the addressable market for cloud services to almost 100% of what's on-premise in enterprises. That's still the biggest majority of IT budgets. So, I think that enterprise-based technology companies who are moving towards a seamless transition and this new architecture, I think the runway is still pretty long.